Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Steve Penny from the silverchartist.com. Thank you so much for joining us today.
You bet, Elijah. Thanks for inviting me back.
Well, it's great to have you. And if our viewers are interested, once they listen to this interview, if they're interested in learning more, go to silverchartistliberty.com. That's our affiliate link with you. There's a reason we're affiliated. One of the things that I think is fantastic about your site is for the paid members, you actually offer a complete over-the-shoulder look at your portfolio, completely what you're doing right now, the trades you're doing, all of that. So I think that's fantastic and very valuable for those viewers who are interested in, investing in the resource sector there. I did want to ask you about what we're seeing in the silver market today, the gold market, the platinum market. It seems like they're all popping amid a fall in the US dollar. We saw a dramatic fall this morning. So your perspective on what we're seeing in the markets today.
Yeah, it's nice to finally be talking on a day when silver is up, and it's been up for the last few weeks here. We're looking at our fourth consecutive green week in silver, which we haven't seen in a while. Where the last year or so, it seems like every time we talk, we've just been getting hammered. So it's kind of nice to see some green on the screen. As far as where we are now, I am confident the lows are in silver. I've said that before and I've been wrong, but I do think that's the case. And there's some reasoning behind that. But that doesn't mean we're not due for a short-term pullback. We're getting extended here on the shorter time frames, and a lot of kind of sentiment and you're starting to see, like on Twitter, for example, when you start seeing the rocket ship emojis coming out again and all that, that's usually kind of like a short-term caution signal. But I do think I am pretty confident here that we've kind of turned the corner in silver and platinum as well. Gold, I think so too, but less confident about gold. Gold is a less favorable risk reward setup than silver and platinum to me right now.
I do find it interesting how, ever since I believe it was, last week, maybe Thursday, we saw that dip of silver below $19. And then it's really just been up from here with not much pullback. You say that, the sentiment out there, I mean, if you're just going off, based on what's on Twitter and everything like that, there is maybe a bit of overexcitement out there right now. Can you expand on that?
Yeah. So I like David Brady, who's on our team here. He came up with this framework to analyze markets. He calls it FIPEST, FIPEST, and that's an acronym for fundamentals, intermarket analysis, positioning on the COT, Elliott wave, sentiment, technicals, and then /M for manipulation. And the idea is that the more of those things that kind of align for a turn in the sector, the more confident you can be that a turn is happening. And almost all of those things are pointing to that we've seen a turn in silver. But like I said, it doesn't mean we go straight up. What was support becomes resistance. And in silver, I mean, it was major support there, right between 21.50 and 22, just call it 22. Well, here we are coming right back up to $22 area. And that's going to be stiff resistance. I think we're going to punch through it. But often when you test a resistance level with the RSI extended above 70, it's pretty rare that you break right through it on the first attempt. So what often happens, you take a stab at it, $22, pull back, build some energy, work off some of that euphoric optimism, and then punch through it on the second or third time. That's kind of what I'm expecting.
And as for like a time frame here, you're saying kind of second or third time. So this could maybe play out in the next couple of weeks or months, or your perspective?
Yeah, weeks and months, not like quarters or anything like that.
Okay.
Yeah, and I'm talking about $22, by the way. I think we'll get through $22 in the coming weeks and months.
And we are seeing also, as I mentioned at the beginning of this interview, is the dollar index. Your perspective on that, because it seems like we did see quite a drawdown just this morning.
Yeah, and what I like about charts is they kind of they can remove your emotions, your emotional bias. You can just see the data and what it is. And I can share my screen here, but or I can just describe it to you. But yeah, the dollar had gotten extremely overbought in all time frames. That's no secret. Everyone knows about that 120 major resistance. We didn't quite get there. We got up to a peak about 115, and we lost the 50-day moving average. And you can draw an uptrend line going back to February of this year. So it's about eight or 9 months now. Perfect trend line. Every time we came back and back tested that, boom, it bounced. Well, just earlier this week, we lost that support. So to me, that means the path of least resistance is a pullback towards the rising 200-day moving average. And that would be a pretty significant pullback. That's around 104 on the dollar index. If that does materialize, by the time we get there, the dollar might be oversold and due for a bounce. And, to me, when price is above a rising 200-day moving average, it's still in an uptrend. So to lose that uptrend status, we would have to get below the 200-day moving average. And then for that 200-day moving average to begin to slope lower. And to the people who may think, oh, it's a bunch of technical analysis, kind of gobbledygook, this matters. These are the things that matter to institutions, the trading algorithms that really drive these markets. That's a key input into those algorithms is where's price relative to that 200-day moving average? What's the slope of the 200-day? Have we made higher highs and higher lows? So we're starting to see the first cracks in the uptrend in the dollar, but it's still firmly locked in a long-term uptrend. So it would be premature to say, hey, the uptrend is over, but we're seeing some cracks in that uptrend.
Now, if we could see some of the charts maybe of the price points you're looking for on gold and silver so we can get a visual there. And I know we do have some viewers in the comments asking about platinum, so we'll get to that later. But yeah, definitely for all our viewers out there, put in the comments section on the side here, the live chat, any questions you have for Steve, and hopefully we'll be able to get them on air. But yeah, if right now we could maybe see some of the price points on gold and silver.
Sure. And just because we're talking about it, I've got the chart for the dollar up. Here's that uptrend line I was talking about. So we lost that. So let's pull up a chart for silver here. And whenever I look at charts, I like to go big to small. So let's start with the kind of longer term, several year chart of silver. This goes back to September of 2019. And you can see like I said, what was support becomes resistance. Right here was big support going back all the way to September of 2020. Held. Once we lost that, now we're coming up and testing it as resistance. On the weekly chart, we're not quite overbought, but when you zero in a little bit on the daily chart, you can see a confluence of resistance right here. Up here on the RSI, anything above that red line indicates overbought. So we're starting to get a little bit overbought here. And we're at a confluence of resistance. You can see this downtrend line right here, this red line. We've tapped that several times going back to March of this year. And here we are right at it now. And that red line coincides with the 200-day moving average here in yellow. So this is a key test right here, right now in silver. What I would kind of expect is maybe a little bit of backing and filling here. That seems to be the path of least resistance. Maybe kind of pull back. You've got the 50-day moving average, which is rising as support. And then on the second attempt, you punch through that 200-day. Now, could we just blast right through it now? Yeah. I mean, silver's like a beach ball just held underwater or a compressed spring. Choose your analogy. And it could just pop and keep going. I don't necessarily want to see that because these vertical moves tend to, fizzle out and they hurt the most number of retail participants. So I'd rather just see a nice healthy uptrend, higher highs, higher lows, and break through that 200-day on the second attempt.
Now, when it comes to platinum as well, if we could get your perspective on that, because we're seeing, prices we haven't seen for a while here, and it seems like it is a pretty dramatic move up where we've been seeing in the last couple of days.
Yeah, platinum. Platinum really has my attention here. I'm going to show you the longer term chart of platinum versus gold, just to highlight how undervalued this particular metal is. So going back to the early 2000s, platinum traded at twice the price of gold, 2-to-1 ratio. And historically, the vast majority of the time, platinum is more expensive than gold. Well, for several years now, going back to 2015, platinum has traded at a discount to gold, which is a historic anomaly in and of itself, just for platinum to be cheaper than gold. Well, not only is it cheaper, it got down to where it was like less than half the price of gold. That is something that is rarely, if ever, seen. That's like a generational opportunity from my perspective for value contrarian investors. And what we see on this ratio chart here is platinum is beginning to break out. Look at this resistance line. This is a long-term chart. Boom, just broke out in these last 3 weeks versus gold. And platinum has the potential to outperform gold by a wide margin. And I'm the biggest silver bull there is. And I've got more silver than platinum, a lot more silver than platinum. However, silver is the one metal that I can see potentially outperforming, platinum is the one metal I can see potentially outperforming silver in the coming years. And I say potential. I'm not putting a stake in the ground saying that it will, but it could. And you look at the ratio chart of platinum versus silver here, and you can see it's extremely undervalued. Platinum, just to return to where we were back here in 2008, platinum would outperform silver by a wide margin. And there's a lot of potential fundamental catalysts for platinum as well. So I really like the look of platinum. And then one more chart here for you of just platinum itself, where I get too long-winded. This is a weekly chart. And you can see we had this nice kind of like rounded bottom here, this, you call it an arc pattern if you want, right above this $800 support. And look at just this week alone, we're up almost 10% this week. The 200-day moving average is right down here. So we broke through the 200-day moving average. We made a higher high above 975 and a higher high above 1038. So those higher highs, higher lows are what you want to see above a rising 200-day moving average. And all the pieces are in place right now for, sustained move higher in platinum. I'm not saying we like go to the moon tomorrow or anything, but I think we're probably going to resume the uptrend here. Getting technically stretched on the daily chart. Here's that 200-day. So we could pull back down towards this 950 area. And to me, that would be a good entry point.
No, we do have a viewer here asking about platinum, and I know there are a lot of different ways you can purchase platinum. I know even Sprott has like a platinum and palladium ETF. You can own the physical metal, and for platinum, it's interesting, there are 10th ounce platinum coins that some people like for, extreme divisibility. What is your favorite way to take advantage of this possible upward move in platinum?
Yeah, I love that question because it's actionable information. What can I do with this? Well, most people want to, first question they ask is, well, what's your favorite mining stock? Well, it's really hard to find a pure play platinum mining stock. Most platinum deposits are polymetallic. So you got nickel and cobalt and copper and all these other things in there, which are fine. I'm bullish on those, but it's hard to find pure play exposure to platinum. So I personally prefer just the physical metal myself. And then my plan, if I can, is to swap that platinum for gold down the road as that ratio normalizes. Hopefully I get a lot more gold by buying platinum now and swapping it for gold later. You mentioned those ETFs. The Sprott one, I like that, but I'm less bullish on palladium than platinum, and they lump the two together. So by buying that ETF, you get platinum and palladium. Well, I just want platinum. There's PPLT, that's a platinum ETF. What I don't like about that is I think it's the Aberdeen Platinum Trust or Platinum ETF. But JP Morgan's the custodian, so it's kind of like buying SLV. It just doesn't sit right with me personally. But if you want pure play exposure to just the price, PPLT is an ETF, but I rather just own the physical.
Definitely. And when it comes to the physical, with respect to buying like physical gold and silver, some of the times people like to buy like the American products and easy divisibility if there was to be a currency crisis, that you could barter with. But with platinum, it doesn't seem like there's necessarily that need to buy like the coins. It seems like bars are just as good. Your perspective on that?
Yeah, I don't think it really matters too much. I just buy 1 ounce bars, generic bars myself. Here would be my answer, I guess. Wherever I can get the lowest premium.
I think that's a very good point there. Now, when it comes to, I guess, what we're looking forward here in the precious metals, if you could reiterate for our viewers, kind of for those viewers just joining right now, what needs to happen for precious metals to continue this rally, and what would be the best outcome moving forward after this week or two that we've just seen pretty much a vertical move up in precious metals?
Okay, so I'll go in reverse order there. Best outcome to me would be a pullback, but a gentle one, low volume. If you look at charts, you want to see high volume price rises and low volume pullbacks to support. So, I'd like to see pullbacks towards the 200-day moving average, specifically in platinum. And then for support to hold, a little bit of sideways consolidation, and then move up and take out resistance after, a few weeks of consolidation, a week or two. I think that would be the best scenario for everyone. And going back to the other, you said what needs to happen? Well, I think all the pieces are in place, and I hate to beat this horse to death because everyone's talking about the Fed, but that's the reality. Is that's the near-term driver is Fed policy. And I've said on your show many times, I think the path is going to be they'll slow the rate of interest rates, then kind of pause, and then they'll do a 180 at some point. I don't think we have to wait for that 180 to see the big catalyst. I think when they just slow, and I think their language at the last meeting kind of indicated, hey, we're going to start slowing the rate here because the markets are forward looking. I think where it might seem like a lot of analysts disagree, I think all of us kind of see that slow pause 180 trajectory. It's just we're mixing, different words mean different things to different people. So like to me, a pivot is like this, a slight change in direction, but you're going to continue changing that way. To some people, I think a pivot means like just full on QE, debt monetization, just like, no, I don't think anyone expects them to just go full, from what they're doing right now to, hey, you know what, we're going to start pumping QE and debt monetization, send stimmy checks out. Like it's a process. And once that process begins, that's the pivot. and the metals will anticipate that. And I think that's what we're starting to see right now.
You're saying that the metals are anticipating that, but like the latest Fed meeting seemed to not hint at that at all, because it seemed like Powell was very very hawkish and saying that we need to get inflation under control. So what is giving you the giving you the idea that the Fed is looking to pivot sometime in the near future?
Yeah. So at the press release, it indicated the pivot, and then in the comments after the interview is where he kind of went back to that hawkish comments. But we're seeing things from like the World Bank, and afterwards, was it Cash Carry or like TF Metals? Craig Hemke calls them Fed goons. I forget their names, but one of the Fed goons came out and they kind of like polish. They come out and make follow-on remarks, indicating, we're starting to see them float trial balloons, kind of preparing the market for slowing the rate of increase. So there have been comments, and it was mixed messaging in that last Jay Powell, the FOMC meeting, because the markets rallied at first because he did indicate a slight pivot, but then in the remarks afterwards is when he kind of backpedaled on that.
No, it seems like the end game of all this is if the Fed does pivot, then we're going to see increased devaluation of the currency. Mm-hmm. And we're seeing around the world countries moving towards gold, investors around the world taking delivery of metals off the COMEX, both gold and silver. Your perspective on this, and we also do have a viewer's comment here about how they believe that money has flowed into cryptocurrencies as kind of a safe haven and alternative currency, but that money will flow eventually into precious metals. Your perspective on that?
Yeah, 100%. And just one quick follow-up thought on the Fed pivot. Jay Powell's also said we're going to get positive real interest rates. And again, that can mean a lot of different things to a lot of different people. What do you compare it to? Most of us, I think, would be inclined to look at the CPI, which is somewhere around, it just came out, 7-point-something% annualized. So you'd say, oh, well, they got to raise interest rates above that. That's not what the Fed looks at. They look at PCE core, and that PCE core is around 5.2. It's 5-point-something. I want to say 5.2. So to them, by their definition, if they can get the PCE core, interest rates up to or above that PCE core, so around 5%, which is what they're targeting right now. So if inflation comes down just a little bit, down into the 4s by that PCE core metric, and they get interest rates to 5, that they're going to say, hey, victory, positive real interest rates. And I think that can happen by January, February. And the markets are looking beyond that. That's where the pause comes. To your follow-on question, money coming from crypto. Yeah, last I know the crypto market cap, total market cap, exceeded $1 trillion there. So if, say, half of that comes out, or a percentage of that, that's enough and it goes into silver and gold. Yeah, it's enough to have an impact. I don't think it's enough to like send it to the moon or through, these big resistance levels, but it will be a positive impact. And I think that will happen. Money will gradually come out of crypto. I'm not saying crypto is going away or anything like that, but I think some will come out of it and into the metals, and it'll be a tailwind, just another tailwind as we move forward.
There's a difference in history there, right? Yeah. Behind those two assets, where the cryptocurrencies have been around for 10, maybe a little over 10 years, but precious metals, gold and silver, have been around for 6,000 years. So it seems like in this kind of environment where we may see a move out of paper currencies, it seems like the first thing to look at should be precious metals if we're going on a historical, if we're going by history.
Yeah, 6,000 years of history is replete with hundreds of examples of some other form of money trying to replace gold and silver as the primary source of money, and it's never worked. Gold and silver have been money for 6,000 years, and unless this time is different, it's going to be again, or it still is. And what I meant to say there is, for 6,000 years, gold always does a full accounting for the expansion of debt-based fiat currency. It always, 100% of the time, has done that, and this time will be no different.
All right. Well, Steve Penny, we really appreciate your time today. If our viewers are interested in learning more, go to silverchartistliberty.com. That's our affiliate link with you. Also, you can find that in the description of this interview here, and just go check it out. Sign up if you like what you've heard today, and also that helps Liberty and Finance along the way. So thank you so much, everyone, for joining us today. And Steve, any last thoughts before we let you go?
No, it's been a rough a couple of years here, really. I was going to say a few months, but really a couple of years since that August 2020 high. And it's hard. I mean, it's not easy for me either, but I believe with 100% conviction that we're in the right sectors, that this time is not different, that gold and silver will perform as they have in the past. And, volatility is rough, but don't conflate volatility for risk. I can't think of a lower risk sector to be in as far as risk reward setup over the next few years than the precious metals market. So thank you for inviting me, Elijah.
Of course. Anytime. Thank you so much, Steve, for your time.
You bet. Thank you.